Mr. Michael Brown. Hope everyone is okay. Good morning, Chris. You're always very quick. We appreciate that. Oh, nearly always quicker than Michael Brown, who's just joined. Let's invite you as the co-host, and that would be a start. I believe the co-host invite is winging its way to you. Just give it a second.
Good morning, Ryan. Good morning, everyone.
Yep, it has. Good morning.
It has what?
Hello.
Yes.
Yeah, sorry, you're a bit quiet.
Well, I said good morning, and then you said yes, it has, and I don't quite know what has done what.
Well, yes, it has hit the co-host invite had hit you because I saw you flipped to co-host.
Oh, I see. Right. Right. I'm
Yeah.
here. I'm ready and raring to go.
Good. Well, let's get the legals out of the way. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited. Trading as PIQ or PIQ Suite or its affiliates, including the hosts and the guests, which, as you know by now, is Mr. Michael Brown and myself, Mr. Brian Paisley. Way! Happy Tuesday. I've had quite a few
Yes.
coffees this morning. Can
Oh.
you tell?
Oh God. Oh, does anyone else want to co-host this morning,
Oh, no, don't say that.
or can we
That's not
mute
very
you
nice.
somehow?
Yeah, that'd be ideal. Right, crack on. What's going on?
Right. Indeed. Good morning, everybody. It was a choppy day for financial markets yesterday. It very much felt like more of the same, to be completely honest with you, with participants largely picking up on Monday morning where we left off on Friday evening as fallout from the much hotter than expected December US labour market report continued. Although it must be said that the early losses we saw in the equity space with the S&P and Nasdaq down by well over 1% in the futures market in the morning session. Those losses did pair as the day progressed. The S&P closing marginally positive on the day. The Nasdaq ending the day down by just a third of 1%, although we were off by about 1.5% intraday. Nevertheless, we did see those post-NFP moves continue broadly across other assets. Treasuries continuing to sell off across the curve, led by tens, which rose by 2 basis points on the day, and the dollar continuing to gain broadly, although again the dollar index failing to sustain upside north of 110, which was also where the greenback rather ran out of steam after the jobs data on Friday. Some of those market moves, though, have reversed course overnight, and this came after a Bloomberg report, which was further reinforced by sources from the Wall Street Journal, that Trump's trade team are planning to impose.
You were very careful with that one, weren't
I
you?
was incredibly careful with that one. That they are supposedly planning to impose tariffs on various trading partners of the United States in phases, increasing tariffs by between 2 and 5% per month, as opposed to just going 25% all in one go. That has seen fixed income gain ground, Treasury yields moving lower, and also mercifully at last gilt yields moving lower at the open as well. Although some of those initial gains have faded, and also seen
I was going to say,
equities.
don't call it a comeback.
No, I mean we're nowhere near out of the woods, of course. We've also seen equities move higher. The S&P future trading up by about 0.5%. The Nasdaq future up about 0.75%. As with any of these headlines, though, they are via anonymous, unnamed sources and people familiar with the matter. Take them with a huge pinch of salt, and bear in mind that the potential for a Trump tweet or a Trump Truth Social post at some point this morning saying that this is complete nonsense, and actually we're still planning to, impose tariffs all in one go. The potential for that is very, very high indeed. So these moves are potentially liable to reverse in very short order.
Just quickly on that. Well, one, I can see on the note from our dear friend Andrew Hart that Trump media up 21% yesterday, which apparently makes Donald Trump $872 million wealthier.
Good for him.
But going back to, yeah, exactly. You wouldn't mind being a pound behind it. But going back to this idea about staggered or stepping stone, well, or however you want to describe it, tariffs. I actually think this is a really good idea. You whack on very small tariffs on companies and entities that you want to kind of change around, and you say, look, until you agree with us, we're going to keep ratcheting up. So it will speed along the process. So hopefully that means less of this 90% done on for 4 years that we saw in the last time.
Oh yeah, I agree. It's certainly not a bad idea, and it's certainly not a bad
I'm
negotiating
not saying
strategy.
yeah, I don't believe tariffs work that well in the first place,
No, nor
regardless.
do
But I'm
I.
just saying this way of going about them is, it's a novel way, and I can understand how it could be better than just going, oh, well, here's some tariffs, whack them on there, and because then they're done, right?
Yeah, and you can see why some strategist would have come up with that in a brainstorming session or whatever. But again, the question is, does this actually come to fruition, or is it just
Yeah,
complete
no, of
nonsense?
course.
Moving away from the trade side of things, plenty of other bits and bobs to get through this morning. Although we didn't have any notable data releases yesterday. Moving through though, continuing to catch the eye. WTI up by another 3% yesterday, trading just shy of $79 a barrel to its highest level since August of 2024. Of course, this comes as participants price in tighter supply after the US slapped a whole host of sanctions on Russia towards the back end of last week. Moving away from that, back here in the UK, we did hear from the Prime Minister Keir Starmer yesterday. He was saying that the government will absolutely stick to their fiscal rules and that Chancellor Rachel Reeves is doing a fantastic job and has his full confidence, which, if anyone is a football fan on the call, is normally what club owners and directors say just before they sack their manager. Interestingly,
Goodbye.
well, indeed. Interestingly, Keir Starmer was asked twice to commit to Rachel Reeves being Chancellor at the next election and refused to do so. He just kind of dodged the question. Normally, you might say that's not newsworthy. The reason that it is because Starmer has already made that commitment when it comes to David Lammy being Foreign Secretary at the time of the next election in 2029. Now, it is worth noting that the Prime Minister's spokesman was rushed out into the media at about 9 o'clock last night to say, no, of course, Rachel Reeves will be Chancellor at the next election. But nonetheless, perhaps Starmer just laying the ground for Reeves to be thrown under the proverbial
Yes.
bus as and when manifesto commitments need to be broken. We are due to hear from Rachel Reeves today, actually. She's due to be speaking in the Commons ostensibly about this China trip that she made over the weekend, where we got
Oh
600
yeah,
million
yeah,
quid, which is
yeah.
basically
Right.
pennies. But nonetheless, MPs will, of course, question her on what is going on in financial markets at the moment. So it'll be interesting to see if she has anything to say on that front. Some tech headlines for you, which we all know is an area that I'm fully on top of at the moment. Firstly, the US. They've unveiled a whole host of curbs on exports of NVIDIA chips. Now, it's important to bear in mind, first of all, that these rules will not take effect for another year. So the Trump administration could, tear this up or completely change their mind. Basically, what's happening is that the US are trying to cap the amount of computing power that can be sold to most countries around the world, and that those countries can either increase their limit or bypass those limits if firms within those countries agree to certain security and human rights standards. This feels like a very, very backwards way of just saying we don't want to send our chips to China, but not saying that explicitly. Also, on the subject of NVIDIA yesterday, and I'm going to be honest, I need a translator here. This is according to the information, the publication. NVIDIA customers have cut their orders of Blackwell GB200 racks. Apparently, so these customers include Microsoft, Amazon,
Racks, you
Google,
say?
and
I love a
Meta.
rack. Can't beat a
Oh
good rack,
no!
I always
Oh
say.
no!
I'm referring
Well,
to chips, obviously. I'm referring to
well, of
servers.
course. But some of
Quick
these
move on.
customers are waiting for a later version of these racks, and that later version may not be ready until the second half of 2025. As a result, those customers plan to
Well,
buy older NVIDIA chips instead. If anyone has any fucking idea what that means, please let me know. But NVIDIA
well,
did trade as much as 4% lower yesterday, so
I
clearly
do
it's not
always
good
say
news.
it's worth waiting for a good rack. I've been known to say it. Yeah, I stand by that. So yeah, I can understand their point now.
Oh dear.
Silly.
Well, as I said, clearly it wasn't good news because Nvidia fell off a cliff yesterday. I can see Tom Talks Cars is on the call, so hopefully he can clear up what exactly that all means. Sticking with tech, we heard from the EU yesterday, of course, trying to regulate absolutely everything they can. They're now looking into Apple once again under a Digital Markets Act case. Apple have changed the way that they charge developers within the Eurozone. They're now applying a levy of 50 euro cent on developers per app install, and the EU are basically saying, is that something that they are allowed to do? And last but by no means least, the saga that seems like it's never going to end, the Nippon Steel acquisition of US Steel. I'm going to be honest, this is the biggest racket going. There are two men in the United States that have tried to kill this deal from the outset. The first is the guy who runs the United Steelworkers Union. The second is the CEO of Cleveland Cliffs, who are another big steel producer in the United States. And the reason that he has been trying to kill this deal on what are effectively dodgy, quote unquote, national security grounds is because, one, he doesn't want to compete with Nippon Steel in his home market, and two, he wants an effective monopoly on blast furnace steel within the United States. So guess what happened yesterday? Cleveland Cliffs have put in a bid. Cleveland Cliffs have now put in a bid for US Steel after, of course, the Nippon Steel bid was formally rejected yesterday. And the Cleveland Cliffs CEO was saying yesterday that it is, and I quote here, a case of when, not if, we purchase US Steel. This is an absolute racket. It stinks to high heaven.
Just on that,
I'm going to be honest, anyone in the US government who's been involved in this decision to block the deal should just hang their head in shame.
Just on that, the offer that he's potentially putting in is in the high 30s for what it's worth. But no, I couldn't agree more with you on that one. I did cut out whilst you were talking and I missed some bits, so apologies if I'm about to repeat some bits you've said, but I have removed the NVIDIA and the nice rack part of my portion of the show. Is that you done?
Just as well, because we don't actually know what it's on about. No, yes, that rant ends my segment there.
Perfect. Well, here's some headlines from our dear friend Zach, who is still technically on holiday, I guess, because he's actually working from Thailand at the moment.
For God's sake.
So yeah, it's all right for some. So anyway, start off some headlines in macro world. Pardon me. Chinese officials are weighing an option that could see TikTok in America being sold to Elon Musk if the Supreme Court upholds the ban. That's according to Bloomberg. Although, as bonkers as it sounds, I think you're right to think it sounds bonkers because WSJ sources echoed the reports, although TikTok themselves called them pure fiction, and I'd be leaning on the pure fiction side of the equation, to be honest.
Would there be? I don't know the answer to this, but bearing in mind that Elon Musk owns X/Twitter, is there the potential for some sort of antitrust around that? Well, Musk controlling two of the four biggest social networks in the US. I guess
given that Trump controls Truth Social and he's about to be president, I don't think anyone cares.
Well, yeah, that's very true. Actually,
I think kind of technically, yeah, you're right, but who gives a fuck?
In this day and age, maybe not. Yeah,
to be honest. Although to be fair, I wouldn't mind TikTok being dissolved in the US because at least that means there's less of these content creators knocking around that just do my tits in. But anyway, moving on. China is implementing stricter controls over its once liberalized financial sector. The government has enacted measures including purges of high-ranking financial officials and pay cuts to reduce corruption and curb excessive risk-taking. Now, just on the reading that headline for what it is, I don't think pay cuts are really going to do much to reduce corruption and curb excessive risk-taking, but that's just me. Goldman Sachs, Hatzius is in a Bloomberg interview said he expects China will use broad range of stimulus measures, both monetary and fiscal, to offset the effects of expected US tariffs and the persisting housing downturn. That was in Bloomberg. Trump is considering a Washington trade lawyer by the name of Jeffrey Kessler to lead the Commerce Department's Bureau of Industry and Security, the BIS, a key post in the US-China tech war and overseeing export controls. Over in Asia, currencies, the yen was choppy after BOJ Deputy Governor Himino gave some mixed remarks, saying the BOJ will debate whether to raise rates at its policy meeting next week on its new quarterly growth and inflation forecast. Sorry, I can't speak today. Sticking with Japan, former FX diplomat Kanda chimed in on the yen, saying it is desirable for the FX market to move in line with fundamentals, saying sudden divergences from fundamentals need correcting, so get by your intervention posts. Moving over to Europe, the French PM is expected to lay out in a speech on Tuesday the contours of a deal to water down pension reforms in return for support from the left on passing the budget. Now remember, The French are really struggling to have anything near a functioning government at the moment. The budget is still a massive issue that they can't pass. So if they water down the pension reforms, one, that should reduce the chance of protests, and also, but will, not be great for the budget. But it's a complete mess over there, so one to keep an eye on there. The final price tag for building UK's planned Sizewell C nuclear power station is likely to reach close to £40 billion. That's double the initial 20 billion estimate given in 2020.
I am
Go on.
Buying 40 billion.
Well, yeah, unfortunately, I think you're right. The Treasury is due to decide whether to go ahead with the project in this year's multi-year spending review. I dread to think what they're going to come up with this, because one, you wouldn't trust, you don't trust Labour to sit on the toilet the right way around. I'm pretty sure Keir Starmer faces the flush when he takes a shit. So no idea what they're going to do here. Yeah, I've got no faith at all. And with Ed Miliband in control of the energy sector, I dread to think where it's going. Roll on me moving to Malta or somewhere nice and sunny. The UK, sticking with UK, the UK
build some windmills.
Well, exactly. The UK says it wants to do its own thing when it comes to regulating artificial intelligence, hinting at a possible divergence from approaches taken by its main Western peers. Again, I dread to think what that means. Like you said yesterday, Mr. Brown, unless they're going to come up with some robot that buys guilt, I think it won't really make much of a difference. I did like that, by the way. Moving over the pond, Trump's plans to ramp up LNG exports could provide a $1.3 trillion trillion boost to US economy over 5 years. That's according to S&P Global. A couple of geopolitical headlines for you. Israel and Hamas are on the brink of a ceasefire deal. President Biden said on Monday, moving closer to bridging a fundamental divide. Israel wants its hostages back and then to continue the war, whilst Hamas doesn't want to release captives without ending war. That's where we're stuck on at the moment. Just on this, Biden, if this goes through, will take all the credit, obviously. But I think, fair play to Trump. He did say that unless this is sorted out before he gets in, there's going to be all hell to pay. And it feels like there has been a bit of a mad rush to get this sorted before he steps in. So, I see David listening in, so he'll probably know more about it than me. But that feels like the potential of Trump coming in and really kicking shit up is probably forced people's hands a little bit here. Greenland's PM says he will seek a close relationship with the US, but highlighting the Arctic islands' push for independence amid renewed interest from Donald Trump. Again, just further on this from my take, Western media, MSM and all that bollocks, are very much in the, oh my God, I can't believe Trump's trying to buy Greenland. Oh my God, he can't do that. What an outrage and stuff. Pretty much every interview I've heard with people of Greenland, natives, and anything you hear from Greenland politicians, they're all very, very pro sparking up a relationship with the US because they really hate Denmark. And if you look at the history of Denmark's control over Greenland, you'd understand why. We're talking about things like they tried to sterilize the communities in Greenland and stuff back in the day. So, Denmark aren't the good guys here. It'd be great Greenland to get independence, and if they do, fair play. Get into bed with the US because they are a superpower. So anyway, that's my 2 cents on that. I'll shut up. Sorry. Anyway, nuclear. Moving over to our friend Kim. North Korea fired some multiple short-range ballistic missiles off its east coast on Tuesday. That's according to South Korea's military. He's not a friend of the show. That was a joke. Don't write him, please. Inequities. The EU is reevaluating its investigations into major tech companies like Apple, Google, Meta, amid Trump's return, which could see probes and potential fines scaled back. Again, this is something where they're kind of making moves because they're worried what will Trump do if he gets into power, and they can't just walk over US companies like they have been in the past, potentially. I don't know. Please don't read this as I'm a big Trump fan. I just like people that get shit done. There you go. Robinhood, yesterday it came out that they've agreed to pay $45 million to settle SEC charges over record keeping, trade reporting, and other rules violations. They've just been a bit of a shit show. And a couple headlines from our dear friend Andrew Hart that were kind of quite interesting. Firstly, the funding spread red flag. Goldman's derivatives team flag a sharp fall in funding spreads, which are a measure of demand for long exposure through equity derivatives such as swaps, options, and futures. They've declined to 70 basis points from 130 in late December, which indicate lower demand from major buyers, saying it's a significant warning sign for equity investors. So take that on board. And finally, we were talking about net zero and UK power ideals just now. Well, Sir Jim Ratcliffe, who's the Britain's multi-billion pound, owns Ineos, what's it got? Ineos, who's one of Leeds, Britain's multi-billion pound chemical industry. He says that the industry is facing extinction because of soaring energy costs and the shift to net zero. Ineos last week shut down a synthetic ethanol centre at Grangemouth in Falkirk, Scotland, resulting in the loss of 80 direct roles and an estimated 500 indirect jobs in the wider economy. Just to raise this, because we are seeing in Germany energy prices spike and stay higher and soar, and this is crippling to their heavy industry and also their chemical sector. And Germany's chemical sector is pretty massive, and this is another hit on growth that the UK really doesn't need. But again, unfortunately, would you put money on the Labour government to make the right decision here? I would not. But anyway, enough of me bitching. Back to you in the studio, Mr. Michael Brown.
Oh, thank you, Ryan. That was nice and optimistic. Anyway, in terms of the day ahead, yeah, indeed. In terms of the day ahead, the economic calendar is relatively light, actually. We only have one notable release today, and that comes at 1:30 this afternoon in the form of the December PPI figures from the United States. Headline PPI seen rising 3.5% on an annual basis, up from the 3% that we saw in November. Of course, this comes a day ahead of the more widely watched CPI data, which we will get Wednesday lunchtime, although the read across from PPI into CPI is somewhat limited. In terms of framing and market pricing, the curve not pricing any chance of a 25 basis point cut from the Fed in January, fully pricing a 25 basis point cut by October, and pricing a total of just 27 basis points worth of easing by the end of the year. In terms of other bits and bobs to keep an eye on today, we are due to hear from the Fed's Schmid and Williams. We have already heard from the ECB's Lane and Holtzman, neither of whom added much of new information. And we were meant to hear from the BOE's Breeden about 20 minutes ago, but I don't think we actually have. In terms of supply today, for the gilt watchers out there, there is a 30-year linker auction, which I would never usually draw people's attention to, but given the fragile way that gilts are trading at the moment, it is something worth keeping on the radar. And of course, that comes ahead of the UK CPI figures, which we have due out at 7:00 tomorrow morning. And last but by no means least, there are no notable corporate earnings today, although again, just a heads up for tomorrow, which of course marks the beginning of fourth quarter earnings season, with JP Morgan, Citi, Wells Fargo and Goldman Sachs all due to report before the market open on Wednesday. And that is pretty much your lot from me this morning.
Thank you very much, Mr. Michael Brown. Quick shout out, obviously, to our friends at CME. I did forget to, I believe I forgot to read off the FedWatch latest numbers. As Michael alluded to yesterday, we'll see.
Well, I just did. So
yeah, there you go. Also, just worth checking out our new Twitter account, PIQ Breaking News. It's up in the Jumbotron. Basically, we're just setting up a separate Twitter account, which is going to be dedicated raw news headlines. It will be going live in the next hour or so, really. I was playing around with it yesterday with some filters. We just had to do a bit overnight before it gets handed over to the social media team. So do follow that one. As I said, it's up in the Jumbotron. But apart from that, that's your lot. And myself and Mr. Michael Brown, we'll see you bright and early tomorrow. Have a good one.
We will indeed. Bye for now.